I get asked all the time, why invest in real estate? I mean, come on. It's like a big decision that costs a lot of money. And who wants to be a landlord anyway? Honestly, while I've grown my wealth and am heavily invested in real estate against the advice of my financial planner, I recognize that choice is not right for everyone, as it did come with sacrifices. So when you're looking at building your own wealth, which is ultimately better? Rental properties or a stock portfolio? Would it surprise you to know that the value of the U.S. housing market continues to break records, with the most recent owner-occupied value of real estate hitting $45.8 trillion per Fred economic data? That's 53% higher than it was before the pandemic. Meanwhile, the stock market has been doing its own breaking of records, with households holding a market value of $42.6 trillion in the first quarter of 2024. That's 46% higher than pre-pandemic and a 20% increase from just a year ago. I mean, these numbers are staggering, with massive wealth gain and risk. Both have their pros and cons. Today, I want to dive into which of these two investment vehicles might be the best choice for you. Welcome back to my channel. And if we have not met before, I'm Nicole Ruth with the Ruth team, powered by Movement Mortgage, real estate investor and mortgage originator for over 23 years. In this video, we're diving into the big debate: real estate or the stock market? Which is better for you? And before we get too far into the video, make sure to hit that thumbs up button below and subscribe to my channel so that more people just like you can gain the knowledge they need to make savvy investment choices. The dilemma of choosing between real estate and the stock market can either seem overwhelming or a no-brainer for some. I mean, both have their pros and cons, but the bottom line is you have to decide which is better for your financial goals, and then you have to be all in. I mean, sitting on the sidelines in analysis paralysis simply leads to a lack of financial progress. Since I'm a bit of a numbers geek, let's look at the indexed performance of both markets from March 1980 through September 2023. Per Investopedia, the U.S. housing market grew at an annualized rate of 8.6%. Now, you can debate what the right number is, but if we're using the same source, the comparison works. Because over that same time, the S&P returned 12% per Investopedia and 14% if you include dividends. Of course, if you slice and dice and carve out sections within the larger sectors, the numbers can look drastically different. I mean, for example, if you had invested $1,000 in a singular stock, Apple, 40 years ago, you'd have $3.1 million today. Or if you invested in NVIDIA, it took only 25 years to turn that $1,000 into $3.4 million. Well, you could shoulda, woulda yourself. But the same is true for real estate. In real estate, location is everything. If you had bought a home in Washington or California or even Colorado, you would have seen an 828% or 664% or 574% increase, respectively, in statewide home prices over the last 40 years. But instead of focusing on the numbers with the biggest wow factor, let's focus on those historic averages, 8.6% versus 12% growth rate. So if you had bought a $400,000 home with 20% down, with $10,000 in closing costs, you would have spent $90,000 at the closing table. Or maybe you kept renting, or you just stayed put wherever you were, and you put that same $90,000 into the S&P. With an 8.6% appreciation, that home in 20 years could be worth just over $2 million. But if it feels like to you, and it might to me, that maybe over the next few years, we might not appreciate that strong. So what if realistically we drop that to 6% instead of 8.6? That home would still be worth $1.2 million after 20 years. Plus, you'd have an additional $136,000 in net wealth due to principal reduction. Alternatively, if you put that same $90,000 instead of buying a home into the S&P at a 12% growth rate, you'd have $868,000 after 20 years, or $1.2 million if you rolled in the extra 2% dividends. But it's not just about the possible returns, because I don't want to just stop there and go buying real estate yields you more, because there are other pros and cons that might make the decision for you, because not everybody wants to invest in real estate, nor does everybody want to invest in the stock market. And ultimately, usually, a balance of both over long periods of time is the true winner. So let's touch on the benefits of investing in real estate, such as cash flow, appreciation, and leverage, as well as the advantages of the stock market, like liquidity and diversification and ease of entry. To start, real estate may be easier to understand. I mean, not that stocks are complicated, but what is it about each company which makes its value go up or down? With real estate, I love that I can drive by it. I can knock on the door. I can see the walls. I know the location and the ebbs and flows of the real estate market. It's a tangible asset that helps me feel more in control, because I'm a bit of a control freak. Surprise. Some other pros include cash flow. I mean, the rental income from your tenants is creating cash flow. It's like building your own lifetime annuity plan. And even if you have to buy a property that breaks even to start, over time, rents go up. And when they do, they will increase the overall cash flow. When tenants have finished paying off your debt, the cash flow multiplies substantially. I mean, the cool thing about rental income is the numerous deductions you can take against it, reducing your overall taxable income. Appreciation is another pro. I mean, while some areas increase in value faster than others, over time, real estate overall grows in value, especially since you can't build land anymore. It's important to know your area, and whenever possible, buy real estate that owns the land, meaning condos which own airspace or mobile homes which lease land will not appreciate like other real estate. Then there's leverage, one of the biggest pros of all. Using long-term debt, you can maximize a portfolio by buying 2, 3, or 4 properties versus buying one property all with cash, or allowing you to buy an investment sooner than later given the amount of investment funds you have available. Of course, the debt servicing will limit cash flow, but with multiple properties growing in value and the tenants, meanwhile, paying down the debt service, the long-term gain outweighs even today's higher interest rates. Now, let's jump over to the stock market. I mean, one of its biggest pros is liquidity. While investment cash can be locked up for years in real estate, the purchase or sale of a public company's shares can be done literally the moment you decide it's time. It also seems easier to know the value of your stock's liquidity at any given time. I mean, of course, there are online valuation models for real estate giving you a best reasonable guess as to the value of your home, but they're not quite as accurate as, say, a stock price at any given time times the number of shares that you own. Then there's diversification. Not only do you likely own a primary home, so right out of the gate, owning stocks is already a diversification, but you also can own many different types of stocks or companies in a single portfolio for a lot less money than diversifying in real estate. And then there's ease of entry. I mean, investing in stocks can begin almost immediately. It now takes 5 minutes to open and fund an account with Robinhood and begin buying penny stocks right away. I mean, growing the size of your investment strategically and smartly as you learn. I mean, you can certainly get in faster and for less money than real estate. However, With stocks volatility, it's just as easy to lose that investment as it is to gain. Now, I could go on and on and on. And of course, I lean a bit towards real estate, but it does take a much bigger effort to get into. Bottom line, you have to know your risk tolerance, your time horizon, and your financial objectives. Are you looking for passive income and slow long-term growth, or quick access with higher volatility but opportunities for big rewards? In either case, you have to be willing to do the work, learn the path toward success, or pay someone else to do it for you. In real estate, you can invest in REITs, real estate investment trusts, or real estate investment funds. In stocks, you can invest in mutual funds or with a financial advisor. I'm a big fan of having people around you who know your goals and can help guide you towards achieving them. Ultimately, both real estate and the stock market offer unique opportunities for investors. If you've enjoyed this video and you want to see more content about the real estate and mortgage markets, make sure to subscribe and hit that notification bell so you never miss a beat. Also, let me know down in the comments below which side you're on, real estate or the stock market. I'll see you next time.